welcome everyone to our third in our four-part series on the proper process of opening a restaurant or food truck. We've already discussed earlier in our series best practices for initial research, developing a concept, going from idea to concept. Then we spent time on actually the outline of a business plan. That's what we did last time. Hopefully that helped you so that you can see how the sections flow together and how, if it's a small food trailer or say a very large, complex, full service restaurant with bar and private dining room, the principles are pretty much the same. And so now what we're going to do is we're going to spend our third session strictly on opening budget, because the financial section of the business plan is obviously, the foundation for the presentation. Everyone's going to be interested in your business plan when you tell them about your idea, the concept, why it's going to work. You're going to get them interested in how it's going to operate, how you're going to market, where the right location is going to be, the sample menu, etc. But then the last section's the details. How much is it going to cost? So everyone can kind of equate, cost with income projections. And this is where most of the startups will want to sit down with somebody to assist them, an SBDC advisor, or somebody to help them make sure that they get everything in order. You've got excellent resources through the SBDC. So of course, as I told you before, I would recommend using them. The outline that I'm going to quote from today and some of the best practices of putting your costs together that I'm going to review today are all available on a website called restaurantowner.com. I've referred to that before. Many of your SBDC advisors have this information. They're members of restaurantowner.com. So there is an item called the capital budget format. And that's the format we're going to speak to today, because it has each of the categories, and it has each of the categories in the right order that matches, say, the National Restaurant Association's chart of accounts. Why is that important, you might ask? Well, if you're going to take your food truck plan or your restaurant plan to a group of investors, or if you're going to do a bank presentation, they give it to a loan committee, or an SBA advisor is going to go through it. A lot of times they typically compare what you're doing to standard accounting practices. And so to make it easier on the reader, you want to make sure that you're using the same verbiage, you're using the same budget formats, just to make it easier to comprehend. Anytime we can make it easier on the reader, it's better for us. So that's where this capital budget comes from. The categories, not every item in every category are going to be important to every one of the concepts you're developing. We're going to talk about them all, but obviously for some more limited scope restaurants or food trailers and food trucks, some of these categories may not be appropriate, may not have a cost. It's okay to have a zero. In other words, in that column, it's okay to type in an NA, not applicable. So it's better to use the form and then just fill in the items that are appropriate to your concept than to say, I'm just going to develop my own format because some of this does not apply. So there's the general rules. The categories are typically starting out with your real estate related. So for some of you who are maybe in a small community, a lot of times this is important because you're building on property. You're in maybe I'm working with somebody that is doing that now, outside the Bryan College Station area, and they're building on property that they own. So sometimes the real estate isn't just a deposit on a lease, as for most of us it would be. Sometimes it really is land that we're buying, acquiring, and financing. That's one section. The next section is going to be the building section. That's obvious. What will it cost us to build out that building, or what will it cost us to build out the truck that we bought? Then we're going to get into equipment. Then we get into professional services. This is an area that we're going to spend a little bit of time on today, because a lot of times people miss that there's actually professional fees, more than just the designer. There's other things that they have to pay as they go through the process. There's organization and development category that we're going to talk about, permits, etc. There's management and technology pieces of opening, audio, visual, security. We're going to talk about each one of those. Smaller finishes, small wares and equipment. And then there's a big catch-all called the pre-opening other, where that's where we're going to get into how to estimate inventory, uniforms, pre-opening payroll, pre-opening marketing, then the all-important working capital, and a contingency, which is very important because between the time that we build our first budget and we actually find our location or get our funding, sometimes costs change. And so sometimes what we've estimated a big item to be might come in 5 to 10% more expensive between the time that we did our budget and the time we actually order our floor tile, for example, or our tables and chairs. So without a contingency, we're in trouble right from the get-go. So that's the categories, that's the format we use. Let's begin. Building a budget time. Real estate isn't just land acquisition. It's also site development, just in case some of you are leasing to build a building. If you're not buying, but you're leasing, that means you're going to be doing some improvement, grading, parking, lighting, maybe underground drainage, utilities. This isn't appropriate for everyone, but for some of you it is. So this will just be a 0 if we're just leasing a space in a center. Or this will need to be a number if we are, as like I said, some people, this is really appropriate maybe in, say, smaller secondary markets where it's pretty common if you're in a smaller growing community, Longview, Tyler, College Station, et cetera, to where you can just lease land and build on it. So that's the first section, real estate. For many of you listening, it's probably just going to be 0. You're not buying land. You're not improving land. Okay, let's move into the next one. Building cost. That's not really going to be a 0. All of you are going to be having some type of cost to go into the lease structure and fit it up. Construction and food trailers to be fit up. Sometimes trucks that we buy have to be reconfigured or rebuilt. So that's where we put that estimate. A good estimate, and this is probably going to surprise some of you, but construction costs have really risen. Ever since COVID, we've had supply side issues. People opening up small businesses have been shocked at the construction estimates they're getting to just go in and fit up their small counter service sandwich shop. And they're shocked that instead of $80 to $100 per square foot for construction, they're getting estimates that are more like a couple hundred, and that is believable. When you're at this point, you're probably going to want to reach out to some of those services that you've connected with, that we mentioned in our previous episode. Remember how when you were writing your business plan, I recommended connecting to restaurant associations, SBDC advisors, restaurant websites, just to stay current on information. You may want to be talking to restaurant related contractors at this point and just explain to them what you're thinking of building out in a certain lease space, in a proposed suburban location that is in a shopping center. And they'll give you, what rough costs are. And it is going to be a little bit more expensive than you're thinking. And most of that, I'm told, is because of not just shortages, but production cost increases in HVAC, all metals, copper, electrical. So these are things that are driving people crazy. Most of you know some popular chains. You probably eat at a Torchy's Tacos or a Velvet Tacos. Well, in recent conversations with the people that are in their real estate departments, I've confirmed that they've seen a 40 to 50% cost increase in building out their restaurants. So they do a lease in a shopping center, then they have to go on in and do the build out. And if they are a larger company working with volume and they are seeing a 50% cost increase in construction, trust me, a lot of you who are going to be building out your very first restaurant are going to be getting estimates of $200 a square foot or higher. And that's where this goes. Your preliminary estimate for construction is basically what the build out will be. That's category number 2. Category number 3 is equipment. This is going to be the kitchen equipment, things like your hoods and your major pieces of equipment like walk-ins and refrigerators. You're down to your smaller tables and steam tables, refrigerator tops, even your bar equipment and refrigerators. That's where you're going to be putting this number right under equipment. Your food and beverage equipment, the best estimates that you can get there are typically from dealers or kitchen designers. They will give you good rough estimates, even though they know you're not ready to buy. But if you explain to them, what your concept is and how you're doing your business plan, how big the kitchen needs to be, what type of menu you're doing, you'll get a pretty good estimate of the commercial kitchen equipment costs. This is where I normally get a good question from people with regards to budget. And it's always a question versus new versus used equipment. And I think that it's important to look at both. You don't really find the savings anymore in doing used equipment if it's a refrigerated piece. If it's a pizza top table or refrigerator 2-door or a single door freezer. If you're buying those used, many people don't recommend that anymore because the computer technology that's necessary to operate those thermostats is pretty detailed. And health department rules for refrigeration is very strict. And so if you're not maintaining proper temperature, by the time you get your first service call and replace a thermostat, you probably blew all of the money that you saved in buying the used one to begin with. So you typically don't get much recommendations on used equipment for refrigeration or freezers. However, hotline equipment, basic fryers, saute, ranges, ovens, things of that nature. If it's just a direct connection gas piece of equipment, you can save some money. And as long as you get some limited warranty, you're not in bad shape by buying some equipment used. But anyway, that's after real estate. If it's appropriate, comes your building construction estimate, then comes the equipment. And you know where you're going to get that from those professionals that you visited with. The next line item there is your small wares. Small wares is a industry term that we use for the tabletop, the movable equipment, your mixers and your blenders, things that are not permanently installed, but they're still equipment. All of your containers, your Rubbermaids, your Lexans, all of your opening inventory of movable equipment, your spatulas and your knives, your cutting boards and your mats, your trash cans. And so who can help you create this list? Typically those main purveyors that you've been talking to already when you were discussing menu and you were talking to people like a Cisco or a Benny Keith or a whatnot, and they were giving you some information there. They can also give you some pretty good preliminary information of what it costs to open up a kitchen or a bar or a food truck from a get-go, about the types of supplies, how many supplies, what they've seen other people that recently opened spend in this category. Miscellaneous equipment is going to be things like menu boards, interior signage, artwork, specialty decor. That's all in this section. And you might want to reserve some money for that. A specialty mural or artwork or something like that. Interior signage is typically graphics, menu boards. That's all miscellaneous equipment. And sometimes you're going to do that with technology boards. Sometimes you're going to do that with old-fashioned painted boards, chalkboards. But this is where you'll estimate the cost of that. Okay? We're going to move on now to professional services. And professional services aren't just the ones that you know of. There's going to be a few surprises in here. Your architects and engineers, that's one that's pretty easy to understand. Everyone knows that we're going to have some type of a design for our space. Even people that are doing, say, food trucks and food trailers budget a little bit of money for design because they may need to do a layout to work with, to follow, to install equipment by. They might want to do some exterior layout for painters, graphic artists, or people to follow. So there's always some type of architecture and design cost. But there's typically also a professional fee reserved for legal costs. You're going to be setting up a corporation or setting up an LLC. You need to reserve a little bit of money for the legal costs that it's going to take to do that. You should also reserve some time for legal costs for the attorney to review your lease. It's important that that when you find your location, we always talked about using professionals that specialize in our industry. And so if you have a broker that specializes in restaurants and small retail, they'll understand the negotiation of the lease, the type of rent that, should be paid, and they'll represent you well. That's recommendation number one. But they're typically paid out of the deal from the landlord, out of the lease. What you need to budget here, though, is the attorney that they're going to recommend you still have your lease reviewed by an attorney who understands retail and restaurant leasing. They're going to want to make sure that you're protected and that you understand your liabilities, your guarantees, your obligations, etc. So that might cost a couple $1,000s or so. So this is where you will reserve that. After architect and engineer comes legal. Here's another one that sometimes people overlook, but it's also very important because it's going to save you time and money. And that's the kitchen consultant. The same person that might be able to give you the really good estimate for how much you need to save or it's to spend on your kitchen and bar equipment is typically a professional kitchen designer. And these people do nothing but lay out kitchens to match your needs, large, small, the flow that you want so that you're not having to have a poorly laid out kitchen that's going to cost you more to operate because now you need, say, maybe a 4-man line instead of 3. So they'll design it to match your volume expectations. They'll design it to match your labor flow and size and menu requirements. But that does cost a few $1,000s. Architects love kitchen designers. They want someone who's going to lay out the kitchen and specify where electric, gas, elevations, how things are going to be installed. They'll drop that into their plans when it goes off to the city for review and permit. So a kitchen consultant needs to be budgeted. So does accounting and tax work. Not a lot of money, but before you open your first restaurant or you set up a new corporation to, say, operate your food trucks, your catering vans, you need to set up the books. And so a restaurant architectural service, a restaurant accounting service is highly recommended. They know the chart of accounts. They'll take your opening bills and be able to help you classify them for what goes into the balance sheet, what's an immediate expense. They understand how to depreciate. So they're going to need some time to set your books up correctly. And there's a fee for that. So a lot of times we forget that. We just think accounting comes later. Let's open. And now I'm going to need somebody to help me set up my accounting books. Well, actually, we should be doing that before we open. So when you open, you're just busy being open. You've already got your chart of accounts set up. You know how your deposits are going to be broken down, how your invoices are going to be coded. So that should be set up before we open. And that will require a little bit of time and fee. Another professional fee is going to be your graphic designer, because sometimes the people that you're paying to do your architecture, your interior design, might also be the people that you're going to have take care of your name, your logo, and set up that for reproduction, for signage, for uniforms, for menus. Sometimes, however, they refer that out to people who just do graphics. And there are many people who specialize just in doing graphics. They might do murals, they might do painting, but they do computer-based graphic work, and that's their specialty. So if you're going to have a graphic artist, that's going to be separate from architect and engineering, and they're under your professional fees. And then the last one is other consultants. You might have an operations consultant that you are retaining. You might have a food and beverage, a culinary consultant, a chef that you're retaining to help you develop your recipe book or test out your requested menu items. So sometimes people find a bar specialist that they just want to use for a little bit to get a really good cocktail program, a wine specialist if you're doing a wine list. Now, many times this can be one company, a restaurant consulting group, and they can do all that. Sometimes you don't really need a large restaurant consulting company. You just want a specific chef to help in the kitchen, or a specific, bar guy to help with your initial wine list, let's say. And so that goes into your professional services. It's a lot. Architects and engineers typically might charge a fee that could be 8 to 10% of your construction cost. You're going to think, wow, that's a lot. I might be spending $20, $30, $40, $60,000 on total design. That's possible. Now, it's not all the time. There are many small concepts being done where the design is really limited. The space is much smaller and the design fee can be a lot less. I just want to give you some industry ranges so that you're kind of prepared for the best practices that are out there for opening restaurants in today's economy. Legal work is not needed to be done by an expensive downtown attorney firm that charges $500 to $800 an hour. Please, we don't need to do that. For that amount of money, you can really set up your corporation. It's a simple deal. You want to reserve your name, get a trade name certificate. You want to open your corporation. A lot of times I've seen people do that for $1,000, maybe less, maybe an extra couple thousand or 2,500 for lease review, etc. So these are some averages. Kitchen consultants, again, depending upon the size and nature of your restaurant, the complexity of the concept, it could be anywhere from $3,000 to $9,000, $10,000. Depends, again, size and complexity of what's being designed. So if some of you are thinking of an idea that's a full service kitchen that's also going to service private dining and going to do catering out the back door, well, that's going to be a bigger, more intense, a lot more detailed to design kitchen than some of you are thinking you're just doing a counter service, interesting breakfast, lunch, taco stand, much, much less involved. That's why the range is so wide. Branding and graphic designers, again, that's another couple of things that have gotten more reasonable with technology, and computerized graphics and logo design has become a little bit easier. So I've seen some people spend $500 to $1,500 and get a complete logo package done. And I've seen other people spend $3,000 to $4,000. So it's a wide range, and it's really going to be, up to you. And then the last one regarding operational consultants, sometimes people have engaged a restaurant consulting group. I've done this many times myself in the past, just to help coach through the entire opening, to help people stay on timeline, manage your budget, help you develop your operating systems, finalize your recipes, your training materials, help with the training, help you with the initial hiring of your key people. So if you're really brand new to the industry and you're doing this for the first time, you might interview restaurant consultants that can do all of that. Because you might feel like it's going to be a savings in the long run, if someone can help you manage the timeline, stay on budget, and coach you through all of the items that you're going to be doing while the restaurant's being built. So that's going to be a little bit more of an expensive package. It'll still range widely depending upon the complexity, how many positions, how many managers to train, that kind of thing. But what I've seen in more recently is I've seen people use sort of just spot specialists where they want to bring in a consulting chef to just work on the recipes, finalize them, item cost them, come up with a recipe book, or a bar specialist. And that's much, much less than having, say, a complete consulting company manage everything. So it's really up to you, but that's why you need that line item in there. So we've talked about some of the biggies now. We've talked about build out, couple $100 a foot or more. All of your design related and your organization development comes next. So what's an organizational or development cost? Well, those are going to be your permits and your licenses and things that sometimes we overlook. The good news is it's not substantial like buying furniture, equipment, or building, but it's still there. Like, for example, you'll need your sales tax permit. Some of you are going to be actually applying for a beer and wine or a liquor license. That's where this goes. You're going to be needing to get your commercial insurance set up. So there's an insurance binder, basically a deposit that's paid. That's an organization development cost. The actual building permit, that varies greatly throughout the state. Depending upon what jurisdiction you're in, whether it's a county or a city, your building permit can be very little, $1,200 to $6,000. Your architects and designers are going to know. So again, where does that get budgeted? It's an organization development cost. Along with insurance is going to come workers' comp. So depending upon the revenue that you're projecting, depending upon the amount of staff you're projecting, your insurance specialist is going to give you pretty good quotes on what to budget for that. Some of you are thinking, great, an insurance specialist. Where do I go to get that? It's the same place now. The advisors that you're working with will be able to refer you to. The restaurant associations in no matter what part, of the state you're in will be able to refer you those who specialize. Sometimes your real estate broker knows of some insurance companies that they've stepped over and worked with in the past for small retail or restaurants. So you'll need to meet a couple and get the quotes, but anything having to do with insurance and workers' comp is going to be in this category. Another one that surprises people is typically there needs to be a utility deposit. When the contractors are building out your space, when you take over the space, everything's going to get transferred into your name or your company's name. Well, if it's a first-time restaurant and you are going to be posting a deposit to the power company, gas company, some cities charge a deposit for commercial water permit. Now, it isn't substantial. This isn't going to be thousands of dollars, but still, it's going to cost some money. It needs to be budgeted, because if it isn't, these are all those little things that can sometimes add up and then make you get very nervous before you open, where you're wondering, where the heck did the money go? I've got to order groceries now, and I spent some money on things that I didn't budget, and now I'm worried. So if you follow this format, it's going to remind you of all the items, large and small. Utility deposits, even your menu printing is an organization developmental cost. So this is where how you decide your menu, whether it's a hanging menu, a pass out menu, maybe it's a combination of both. Your menu layout and printing cost would go here. Your operating change and cash would go here. If you're going to have more than one register, you need an operating cash bank. You'll have a small safe that you've got, a backup of change. Typically, the total amount of money that I've seen small restaurants operate with is $1,000 or less to have change banks and have enough backup money for that. Brings up an interesting point where some of you who are going to be in major metropolitan areas are probably seeing that there's a tremendous movement beginning for restaurants and other small retail to really not accept cash. I don't know if that's going to be something that will work for your concept, but it is out there. In larger markets, it seems to be more accepted, where most people have been doing debiting, most people have been doing charging, we're used to it. Most all POS now just have that tap, swipe, keep on roll. And so people are getting kind of used to that. Just this morning, I was at a small bakery. I went in to get a cup of coffee and a croissant. I was reaching into my pocket and I was told, we no longer take cash. Everybody's tapping and going. And so now I'm not recommending, because that's your decision. I'm recommending that you still kind of take a look at the budget item, and you might need to budget a cash bank because you might take cash. Don't be surprised though, if 80 to 90% of your customers are charging or debiting. Even something as inexpensive as, say, fast food today. The reports that we're getting is that 60 to 70% of the time people are going through a drive-through window, they're tapping or swiping. So it doesn't necessarily mean the amount of transaction anymore. It really means sort of the customer buying habit. Because if it's a $6 or $7 McDonald's in the morning coffee, egg McMuffin, if you're just used to debiting or swiping, you're going to do it. So it used to mean more expensive places, more credit cards, lesser expensive places. And most of you are probably thinking of a smaller version restaurant, counter service, lesser expensive. So you're thinking, I'm probably going to process less credit cards. Not so much, because the buying habit and the convenience factor of consumers drives their choice of currency more than the amount of money they're spending. So you may wind up not needing cash. It's kind of funny that in major metropolitan areas, that seems to be the movement. We're just moving away from cash. There still is, and this is counter trend, but it's might be important to you depending upon what segment you're playing to. In some small towns throughout the state, I can still find examples that are the opposite. I live in a very small area out in the hill country part of Texas, and there's a tiny town with a cafe, and it's cute. It's just a little country cafe, been there for I think about 60 years. And the Starts Cafe has the same sign in the front door that they've had for years. It says cash and checks only, no credit cards. They've never run a credit card in the whatever 60 years they've been in business. They actually take checks. That assumes people are walking around with checkbooks still. I didn't know that, but you're just going to have to take a look at the currency practice in your area, because it will vary widely, and you may not even be needing to take cash. It's up to you. But that's where that would go. Organization and development, how much cash you need to start the business and maintain in the safe. And the last, organization and development cost, is really more of a reimbursement cost, because there'll be travel, research, concept development cost, things that you bought, places you went, people that you interviewed, lunches that you've bought. Remember in our previous sessions, we talked a little bit about that when you're developing your concept initially. And so this is where you would put that cost to repay you or others that were out there helping you define the idea. But in order to do that, it required purchasing and it required traveling. So that's the reimbursement. So that takes care of your building, equipment, professional fees, and organization and development categories. The next category that you're going to find when you go through this form is called equipment, management, equipment, and technology. This is where you're going to put in what it's going to cost you for things that you know are important to your concept, technology-based. Security system, for example, your point of sale system, your phone system, in the office, your office computers, your printers. A lot of restaurants now are basically doing a really good printer in their back office because it can take the heavier stocked paper and they print their own menus. If you're having a concept that's going to rotate menus a lot, it's going to be important that you maybe just print them in-house. And these printers do have a variation of stock they can handle, color background, type of font. So a lot of restaurants are doing that now. Printers, office computers, phones, point of sale, your music system, your audio visual, TV screens, cameras. These are all line items under equipment and technology. Now, here's the good news. They're not near as expensive as they used to be. You know, the point of sale has gotten cloud-based, and most of you have seen the smaller, very popular cloud-based POS firms, whether it's Square or whether it's Toast or others. The good news is they're very popular and they are easy to operate. They manage your product. They'll give you sales by category, sales by the hour, sales by item. They can manage labor. People punch in and out on them. So most of the main things that you want to have managed, you can do that. And the other good news is they're a lot less expensive than older technology used to be. So it's kind of nice to know that as things get more technologically sound, they seem to get faster, smaller, and also a little less expensive. You might still want to spend a couple of $1,000s on well-placed cameras. You might still want a really good sound system for your streaming and for your TVs. Some of you might actually want to be doing some custom programming that you can just put on a zip drive and you put it in one of those TV screens, and it's a custom program, photos of your food and whatnot. So if those are the things that you're thinking about doing that are going to help your food truck or help your restaurant concept, this is the category where you budget that. It's got a line item for all of that. Security, cameras, audiovisual, office computer, printers, basic office supplies. Excuse me, not an extremely expensive category, but one that requires a lot of detail. And if you skip this, then you'll be surprised later, because large or small, restaurants and trucks are utilizing this type of technology for their POS, cameras, security, and entertainment. So after equipment and technology is going to come any type of exterior finish and equipment. And you're thinking, what might that be if it's on the outside? If I'm leasing a small restaurant in a shopping center, why would I have exterior finishes and equipment? Or even on a truck, that's where we get into the, of course, the customization of the exterior. But also exterior finishes might be decorative landscape items that we're putting around the door or outside on the patio. There might be a small landscape budget because of how you're fitting up the walkway to your restaurant. There might be a custom door or something on the exterior that you're wanting. There might just be decorations that you're wanting, to wrap around your space. So those kinds of finishes and equipment on the exterior have their own little category right after the more major equipment and technology. So a lot of fun, a lot of items to think about, but it feels so much better when you know that you've got it all on paper rather than nervous about maybe forgetting something. Trust me, people reading your business plan are going to feel much more confident in your presentation, knowing that you've got all these categories and all these details, even if some of them are a zero because it's not appropriate to your concept, but it shows the thoroughness and the preparedness that you went through to develop this idea. The next category is what we call pre-opening expenses. So these are just that, expenses that are very important to the pre-opening. They don't necessarily fit at all in equipment, technology, professional fees, construction, but they're still important. The pre-opening services are the kinds of things that you won't be spending until that couple of months before opening. An example would be beginning uniforms. You might decide the type of uniform long ago because you might want a special type of color or hat or apron or logoed chef shirt or whatnot. But you don't really need them ordered and delivered until just before you're moving into the building. But you still need to have that order written and budgeted, and the estimated cost is going to go into your beginning uniforms. How about paying utilities during construction? Sometimes, depending upon how you do your construction, your contractor is paying for the power, their water, while they're building out your space. Sometimes they're not. And so if you're responsible for utilities during construction, this is where you would budget what that needs to be. What if there is a vehicle that's important to your concept small delivery vehicle, because that's part of your concept. You want to do neighborhood delivery for pizza. Well, this is where you would budget that. Or perhaps maybe you're going to start with off-premise catering as a part of your initial restaurant. So that catering van is going to be a pre-opening expense. Uniforms, vans if appropriate, utilities, again, if needed. And then the bigger ones are inventory, pre-opening marketing, pre-opening staffing. So let's go through those in greater detail. Opening inventories is a very key area that I see people underestimating. They sit with their vendors between meat and bakery, grocery, you get a really good sense of what it's going to take to open up the kitchen. And then that's what we order. And that's what we order as our beginning inventory. And the mistake that's made there is that initial delivery that you're going to be getting for all of your paper and packaging and all of your food, grocery, meat, all of your perishables, produce, dairy, etc. You're going to need those to get your staff started with batch recipes, training, testing out equipment. So by the time you're getting close to opening, most of that product has been used. You'll probably be needing a second delivery right before opening so that you've got product on the shelves and product to operate for a few days. So when we work with people and we sit with the vendors, we get that first order, but we make sure that we budget about half again as much as that first order, because you're going to be needing to order more product in order to open. Does that make sense? Just remember that when you first order your initial food. For some of you, you'll be doing beer and wine. Some of you liquor. All of you, you'll be doing paper, packaging, to go, wrapping, foil, those kinds of things. Well, a lot of that is going to be used to set up the kitchen and organize. And then you're going to be using that just to make your batch recipes, train your staff, test the equipment, have some dry runs. So then when you're ready to open, you're going to have to be ordering typically another order from each of those vendors, more bakery, more dairy, some more canned goods, more frozen, etc. So that's where it gets kind of tricky. Sit with your purveyors and remember to remind them that you're needing to budget, not just your opening order, but your opening order and your replenishment to get you actually, open for business. Marketing is an interesting category because now it's broken down into so many different medias. And your pre-opening marketing should probably be the development of your website, first and foremost. And that's a line item just by itself. There are professional website developers. The really good news is typically people that are going to be referred to you that do really good website development for restaurants are also people that do very good social media management. They're going to want to talk to you about food photography, Instagram posting, and other social media management sources that they can offer. There might be some pre-opening parties that you're planning, invitations, gifts. All of this kind of stuff for a pre-opening is going to go into your pre-opening marketing. And I always recommend that you might want to have a professional public relations person or company. There's normally small groups of people or individuals that specialize in the promotion of restaurants, helping you get on the right food review teams, invite the correct influencers, bloggers, work with a good community program for your benefit and theirs, pre-opening, grand opening parties. So you might want to interview a couple, but they charge a monthly fee and they probably need to start working a couple months before opening. So where does that money go? Here under pre-opening marketing. Pre-opening marketing, opening inventories, uniforms, all of these items are under that category called pre-opening expenses. So website, social media, PR people, private party, this could total cost, could be anywhere from $5,000, $10,000, $15,000 to get that done. I've seen people spend more, but typically to cover all of the bases, you may not need to. Okay, now let's jump into the next one. Personnel. Personnel is another area that, again, if you're just doing your budget for the first time, a lot of times you'd overlook because you're thinking that staff means payroll. Payroll comes after I open. Well, not necessarily. There is going to be a pre-opening payroll. You'll probably run a couple of payrolls before you open because most of you that are opening your first restaurant are going to be bringing on your key people. You should bring them on at least a couple months before opening. So if you bring on your key staff, or let's say you're the chef and you're opening your first restaurant, but you want to bring in that front of the house manager, well, that manager is going to be working 2, maybe 3 months before opening. So there's a salary. And that person needs to be meeting with you ahead of time to develop the systems, develop training, meet with the purveyors, lay out, the dining room, interview and hire the staff. Then you've got training a week or 2 before opening is a minimum for staff training to let them come in, taste the food, practice on the POS, read, your materials, listen to you, so they understand your mission, what you're trying to accomplish, the vision. Then they need to practice. And practice means 1 or 2 mock services. Sometimes you break up the staff and have staff A serve staff B. It's a dry run. It's meant for everyone to be able to develop some confidence that they know what you want them to know before you open. So in order to do key people a couple of months beforehand, you'll break that down for your management, chef, staff personnel. That's one line item. What are we paying them? For how long? Boom, that's the amount. Hourly employees, front of the house. For some of you with a small concept, it may not be many. It's the cashiers, the counter servers, maybe it's full service, host, busser, bartender. In the kitchen, it's going to be the people that are doing the prep, the dishwashing, the line cooks, grill, broil, saute, etc. So you might find that you've got a total staff of 20 people. For some of you with larger productions that are having private dining rooms, catering, etc., it could be 2 to 3 times that. So a good rule of thumb is you're going to need to meet 2 to 3 times the amount of people in order to hire the amount that you need. So you're going to be starting 6 to 8 weeks before you open, just doing interviewing, getting online applications, meeting people on site and doing interviews in order to meet 30, 40, 50, 60, 70 people to hire the 25 that are ready to go. Now, when you hire those that are ready to go, what's an average amount of training, which people ask all the time? How do I know to budget my pre-opening payroll? It's easier for me to estimate the 2 key people that I've had on for a couple of months because it's just 2 of them. I know their salaries and how many payrolls, and I've got that number. But if they're interviewing staff, and now we bring staff in, say 10 to 14 days before we open, some are training during the day, some are training during the night. You have to come up with a training model. And that model needs to just be rolled to the high side. So you know how many people it's going to take to work how many shifts, and roll it to the high side. So you know that you're training 30 or 40 hours in order for them to taste the food, practice, work on the register, and go through all of the stations a couple of times. So before we open the door, we're really, really prepared. So that if they're going to have to say 30 to 40 hours of training, times the hourly wage, times how many people, that comes up with that number. And so don't be surprised, you know, if that number is 8,000, 12,000. For some of you with bigger restaurants, private dining, et cetera, it could be $20,000 worth of pre-opening payroll maybe that has to be paid, and it has to be budgeted in your pre-opening budget because the expense was incurred before you open. Sometimes you might actually find it worthwhile to engage the services of a recruiter because you're looking for a very specific item, a very experienced pastry chef. Or let's say you're opening a couple of catering, vans, and what you really want is one person who is a key manager, who's going to help you with the farmers markets, who's going to help you with your food truck. You don't need many people, but you need a very key person. Sometimes you have really good luck if you find a restaurant recruiting company, because they will go search, pre-qualify, find where that person is, and refer them to you. Restaurant recruiters, of course, work for a fee. So if you think that you might be utilizing that, there's the line item under personnel for recruitment expense. So it isn't just the hiring of the key managers, it's also the hiring of the hourly staff, the training of the hourly staff, and perhaps even a recruitment expense that makes up that category. So that got us through opening inventories. It got us through pre-opening marketing planning, pre-opening staff, and all of the other miscellaneous pre-opening things like utilities, perhaps, uniforms, automobiles, if delivery or catering is important to you. So those are the basic categories. Now the last 2 that are left are working capital and a contingency. And I want to tell you the formula that I've seen work best as a best practice for reserving a contingency. That's different than working capital. Contingency, as I mentioned on the onset, is a reserve for money for an item that is an approved item, but it just might be more expensive. Or maybe you had to make a change, and that change to a material or to something costs more. So typically you're safe if you take a look at your hard costs. Hard costs are defined by construction, equipment, furniture. If you look at those big items and you take 10% of that and put that in your contingency, then at least you've got a little bit of reserve just in case the tables or the chairs or the stools or the equipment or something having to do with a particular tile from the contractor does go up. So I would always take a look at those categories. Those were the first couple categories that we talked about today, construction and equipment. And I would see what those 2 categories total, add 10% of that down to the bottom under contingency. And at least you've got a pretty good number to help you sleep at night, knowing that just in case there's a minor curveball, you might be able to dip into it. Hopefully it doesn't happen very often, but you do need to have it just in case. And then the next one is working capital. And that's a key question that a lot of people want to know. How do I manage that? How do I estimate that? And there's many different ways, but the one that I've seen work for most people is you take a look at your operating budget, and you take a look at your most regular basic costs, so that even if you're not busy, you know there's going to be a certain amount of utilities, you know there's going to be a certain amount of staff, you know that there's always going to be rent. So if we would just go through our income building budget and take a look at our lowest level of expenses, our break even. So when we first open, if we're slow, how much money is it still going to cost me to operate with minimum staff, rent, fixed overhead, utilities, and do 90 days of that? That is sufficient to give you enough time to build volume, get your money churning, deposits in, so that you are building up an ability to pay the bills without living on your working capital. Now, the last comment I want to make about working capital is again something that I've seen work tremendously. A lot of times people overlook this, but my recommendation is, in order to make working capital work for you, you should keep it separately from this budget. Once you get your partners, or once you get funded, you should go to how much that working capital line item was. And let's say it's 25,000, 30,000, 40. You should actually reserve that in a separate account. Or a lot of times I've seen restaurants set that up not in an operating budget, but in a line of credit that they don't open until the day they open. And then you know you've got working capital. If you just keep it in the large amount of your opening budget, it's too easy to spend some of that while you're going along. You bought a second fountain for the patio, or you decided on the more expensive audiovisual system. Well, that's a few thousand more. That's okay. I'll take it out of working capital. Oh, I decided to add one of these or two of these. I'll take it out of working capital. And then what happens is the restaurant opens. Yay, people are trained and we're open, but our working capital is now 12,000 instead of 30. And we have one foot in the grave because we may not have enough time to build the momentum and build revenue before we run out of funds to pay bills. So treat yourself correctly. If you're going to go through this process and you want to follow the best practices, and you did all this work on your concept, you wrote out a really good plan, don't misuse the money once you finally get it funded. I would take that working capital and hide it in a separate line of credit and not touch it to the day you open. So that's the message for today. This was series 3. It was all about cost budgeting. Let me do a quick summary and remind you that I quoted categories that come off of the most current capital budget that is approved utilizing the National Restaurant Association's chart of accounts. Your SBDC advisors can refer to the same document. You can download this document off of restaurantowner.com, but it's a living document. The only way to make your budget work is to utilize those sources that hopefully you've developed through the process of writing your business plan, because they are the ones, whether it's the grocery company, whether it's the real estate broker, whether it's that contractor you called, whether it's that equipment estimate, they're the ones that you're going to need in order to have confidence that you're putting the right numbers in the right category.